One important topic that I would like to discuss today is STP and the implication of tax in STP. So, what is STP? STP is basically systematic transfer plan. So, very often we see that instead of keeping our extra fund in bank, we try to maintain that fund in a debt fund or maybe in a liquid fund, and every month we try to transfer some amount from that liquid fund to the equity fund. The one of the main reason being the rupee cost averaging. In these cases we need to understand the tax implication. So very often we think that there is no tax applicable since we are just transferring fund from one category to the other category, but it is not so. So there is a tax that is implied, and it goes as a general rule, and that is for the debt fund. It is taxable for the first 3 years according to your tax slab. So if you are in the 15% tax slab, it will be a 15% tax that will be charged, and after that it will be a 20%. After 3 years it will be 20% with the indexation benefit for the debt funds. If you come to the equity part, in the case of equity part, it is a if it is a short term capital gain, that means within a year, then the tax is applicable is 15%, and after 1 year it is 10%. So having said that, if you're trying to transfer STP, or if you're trying to do STP from your maybe a liquid fund to an equity fund, so for every transfer you need to pay the tax, and that is applicable throughout all the debt funds, and that is also applicable to the equity fund. So yes, for the cases of STP, it is taxable, and the tax depends on the time horizon. If it is a debt fund, for the first 3 years based on your tax slab, and after that it's 20% with indexation benefit. And if it is an equity fund, in that case for the first year, if it is a short term capital gain, then it is 15%, and after 1 year it is 10%. Having said that, in spite of the taxation part, it's still very beneficial for people to go for the STP. One of the main reason being, we cannot time the market. Nobody can time the market. So the basic rule says that every time is a best time to invest in the equity market, and don't try to time the market. So nobody has ever got it right. So the STP always helps in rupee cost averaging. That is one of the best benefit of STP. The other one benefit is there is no obligation. Means you don't have any obligation. For example, when you go for a SIP, there is obligation that you need to pay a certain amount every month. But in this case, in case of STP, there is no such obligation. So whatever you think like, you can withdraw every month, and you can transfer that fund to the other category where you think it is beneficial. And another advantage is, for example, if you are having 1 lakh in your STP, sorry, in your liquid fund, and maybe in a particular month, you see there's a huge downfall in the PSU stocks. So that gives you opportunity to invest in those PSU stocks. So automatically you can transfer that a liquid fund into a PSU fund category, or any mutual fund which is basically dealing with the PSU sector, or there is a heavy weight in the PSU sector. So in that way you can buy at every dip. So these are the latest advantages for the STP. One of the best way to minimize your cost of investment and maximize your return in the long term.